When Warren Buffett makes a move, the financial world listens. Every trade, every investment, every subtle shift in his portfolio sends shockwaves across Wall Street. But this time, what Buffett just bought might surprise even his most loyal followers. Because while everyone's watching tech, crypto, and energy stocks, Buffett quietly placed a bet on a company that analysts believe could 10 times in value. And the reasons why go far beyond a simple earnings forecast. Welcome back to Crypto Equation, where we decode the strategies of the world's smartest investors and connect the dots between traditional finance and the next digital era. Today, we're breaking down exactly what Warren Buffett just bought, why he did it, and what this means for your own investment decisions heading into 2025 and beyond. Now, before we talk about the stock itself, we need to understand how Warren Buffett thinks. Buffett doesn't chase trends, he builds conviction. He doesn't buy what's popular, he buys what's undervalued, inevitable, and misunderstood. While the market moves with emotion, Buffett moves with data, and his latest investment fits that pattern perfectly, because on the surface, it looks like an old, boring sector. But underneath, it's the foundation of what's coming next, a technological, financial, and economic transformation that will reshape how value moves around the world. Buffett's philosophy has always been simple. Be fearful when others are greedy and greedy when others are fearful. And right now, fear dominates both the stock and crypto markets. Inflation is high, interest rates are volatile, and investors are fleeing risk. That's when Buffett thrives. He looks where everyone else is running from. His new move isn't about short-term hype, it's about long-term infrastructure. And the company he's betting on is building exactly that, the next layer of connectivity that the world economy can't function without. Reports show that Buffett's Berkshire Hathaway has quietly increased its exposure to companies tied to AI infrastructure, energy logistics, and financial rails, the backbone of how the next generation of technology will run. And one of these companies, which we'll explore in this video, is sitting at the intersection of all three. Buffett's not buying a company that will change the world. He's buying one that's already quietly doing it. But here's what most people get wrong about Buffett. He doesn't care about trends. He cares about position. He invests early in things the world will later depend on. Think about Apple. When Buffett bought it, most analysts said he was too late. That was in 2016. Since then, Apple's stock has risen nearly 10 times, generating hundreds of billions in unrealized gains for Berkshire Hathaway. Buffett didn't chase hype. He saw inevitability. He saw the shift from devices to ecosystems, from products to platforms. He understood that Apple wasn't a phone company. It was a lifestyle infrastructure company. Now, that same logic is what makes his new move so powerful, because Buffett has always said that investing is about owning parts of businesses that create real value. And his latest bet, according to filings, is in a company that's poised to dominate financial infrastructure the way Apple dominated consumer tech. This stock is part of a sector most investors overlook, the world of financial data, payment rails, and transaction infrastructure. Here's what's so fascinating. While Buffett hasn't said much publicly, analysts tracking Berkshire's portfolio noticed a substantial position increase in Moody's Corporation, one of the most critical yet underappreciated pieces of global financial architecture. Why does that matter? Because Moody's isn't just a rating agency, it's a data powerhouse that underpins trust across global finance. As the world shifts toward tokenized assets, digital payments, and AI-driven credit modeling, companies like Moody's become the verification layer for the entire financial machine. Buffett's move here isn't random, it's strategic. It's positioning ahead of the financial transformation that blockchain, AI, and digital identity will trigger. Moody's, along with similar players like MasterCard and Fiserv, are quietly integrating blockchain-based analytics into their existing infrastructure. Buffett knows the game. Don't bet on speculation, bet on infrastructure. And that's exactly what he's doing. But it doesn't stop there. Recent 13F filings revealed Buffett's new and growing exposure to Occidental Petroleum, a company that most people dismiss as just another energy stock. But behind the scenes, Occidental is at the forefront of carbon capture technology, something that will define the next century of energy economics. Carbon credits, tokenized energy assets, and sustainable infrastructure will create an entirely new market, and Buffett is already there, decades ahead of most. Now here's where things get interesting. Buffett is famous for avoiding crypto. He's called Bitcoin rat poison squared and dismissed most digital assets as speculative. But the irony is that his current portfolio positions him closer to crypto's future than he realizes. Because when you look at his investments, from financial infrastructure to energy logistics, they're the very systems blockchain technology is disrupting. And whether Buffett admits it or not, he's building exposure to the tokenized economy just through legacy vehicles. So why are analysts calling this a 10x opportunity? Because what Buffett just did wasn't about finding a cheap stock. It was about front-running a structural transformation. Moody's, Occidental, and similar companies aren't trading for hype. They're trading for relevance. These firms sit at the intersection of three revolutions: data verification, real-world asset tokenization, and global liquidity. When those three collide, valuations explode. Think about it like this. The last time a legacy sector collided with new technology, we got companies like Apple, Amazon, and Microsoft. They weren't the inventors of the tech. They were the integrators. They took complex systems and made them usable for the world. That's what these companies are doing now with blockchain and digital finance. And Buffett knows it. He's not betting on crypto coins. He's betting on the rails that will carry them. Buffett once said, "You don't need to make extraordinary decisions to get extraordinary results. You just need to make ordinary decisions at extraordinary times." That's exactly what this looks like. While the rest of the market focuses on speculative narratives, Buffett's buying simplicity. Companies with deep cash flow, regulatory protection, and positioning for the future. That's how wealth compounds quietly while everyone else waits for the next hype cycle. But here's the deeper lesson for every investor watching this. Buffett isn't predicting trends. He's aligning with inevitability. He doesn't time markets, he times transformations. He buys when value and timing overlap, and he holds while conviction compounds. That's what separates investors from speculators. Most traders want excitement. Buffett wants results. And the truth is, what Buffett is doing now mirrors what the smart money is doing across digital assets too. They're not trading the noise. They're accumulating the rails. They're buying into the infrastructure layer, not the speculative top. That's how empires are built quietly, because the biggest opportunities in history always start where the crowd isn't looking. Buffett's bet isn't about short-term profit. It's about owning the next layer of the global system before the world catches on. The market always underestimates simplicity. Everyone wants the next moonshot. But Buffett's genius has always been seeing exponential growth in boring things. He doesn't buy flash, he buys function. And when those functions evolve into necessities, the world pays attention too late. Buffett's ability to stay calm when others panic has always been his greatest weapon. And once again, that discipline is guiding him toward an opportunity the masses can't see yet. When investors are chasing hype, Buffett looks for structure. When traders are betting on the next meme stock or speculative token, Buffett's quietly building positions in companies that will enable the world's next financial reset. And that's what makes this so fascinating. Because even though Buffett dismisses crypto publicly, his portfolio has started aligning perfectly with the new digital financial rails that blockchain technology will power over the next decade. He's not holding tokens, but he's holding the infrastructure that will make them usable. Let's connect the dots. Moody's, MasterCard, and other financial data firms are directly partnering with blockchain projects that integrate digital identity verification, tokenized assets, and real-time payment tracking. These aren't theories. These are partnerships happening now. And Buffett's massive exposure to these sectors through Berkshire means that, whether he admits it or not, he's indirectly betting on blockchain success. This is what people miss. Buffett doesn't have to hold XRP or Bitcoin to win in a crypto-driven world. He just needs to own the companies that will benefit when crypto becomes infrastructure. That's how he's always invested. He didn't have to invent the internet to profit from it. He just bought Apple and let the world's demand for connectivity do the work. The same principle applies here. The market is going digital, and Buffett's already positioned. Now, here's the twist most retail investors don't realize. Buffett doesn't just buy, he accumulates in silence. He's not trying to catch the bottom or time a breakout. He's creating exposure over years, not months. It's a long game that compounds quietly, and that's what most people are too impatient to play. This is the core lesson. Wealth isn't built by timing the market. It's built by understanding what's inevitable. Buffett's genius lies in buying inevitabilities at a discount. And right now, financial infrastructure, the systems that will power AI, blockchain, and real-time settlement, are all still undervalued because the world hasn't realized how central they'll become. He's doing now what he's always done, buying tomorrow's necessity at today's fear-driven price. And that's where most investors fail. They chase headlines instead of frameworks. They focus on the stock chart instead of the world map. Buffett zooms out while everyone else zooms in. When he sees chaos, he sees calibration. When he sees panic, he sees potential. That's why his returns look slow in the short term, but unstoppable over time. Buffett's play here is a blueprint for anyone watching, especially those of us in crypto. The lesson isn't just about which stock to buy, it's about how to think. In crypto, the same principle applies. The biggest winners aren't the ones chasing the latest trend. They're the ones holding positions in infrastructure projects that will power the system once it matures. That's why the smartest crypto investors are focusing on networks like XRP, Ethereum Layer 2 solutions, and tokenization platforms. Not because they move fast, but because they'll be essential when the world goes digital. Buffett's philosophy and crypto's long-term vision actually align more than people realize. Both rely on conviction, patience, and seeing value before it's visible. Buffett said, "The stock market is designed to transfer money from the active to the patient." That's not just about stocks, it's about every market. And it perfectly describes what's happening in crypto right now. The impatient traders are exiting, the patient builders and investors are accumulating. And when the shift happens, it will look sudden, but it won't be. It'll be the result of years of quiet accumulation and smart positioning. Now let's get back to Buffett's move. Why do analysts believe this investment could 10 times? Because Buffett is betting on the expansion of financial infrastructure during a period of global restructuring. Every major financial system, from banking to energy to payments, is being rebuilt around real-time data. Companies like Moody's, MasterCard, and Fiserv are integrating advanced AI and blockchain tools to handle that transformation. When the global financial system tokenizes real-world assets, everything from bonds to carbon credits to oil, these companies will control the verification and settlement layers. That means their relevance will multiply exponentially. Buffett's not betting on volatility, he's betting on necessity. And necessity always scales faster than speculation. What makes this even more fascinating is that Buffett's style of investing, boring, predictable, long-term, is exactly what the crypto market will need to mature. The future of digital assets isn't in meme coins or hype. It's in structured, regulated liquidity that moves trillions efficiently. The moment institutions fully enter the blockchain era, they'll rely on companies like the ones Buffett is buying now. He's not late, he's early in a completely different way. He's holding the bridge between old finance and new finance. The irony is that Buffett's strategy today mirrors the early stages of what Ripple has been doing with XRP, building utility before recognition, laying rails before the train runs. Both operate on patience, both are misunderstood by the mainstream, and both are preparing for a transformation the world isn't ready to price in yet. So, what can we learn from this as investors? Stop chasing headlines. Start studying structure. Buffett's moves are proof that long-term wealth doesn't come from guessing the next moonshot. It comes from aligning yourself with systems that will become indispensable. You don't need to trade like Warren Buffett to think like him. You just need to understand that timing hype is luck, but timing inevitability is skill. Buffett's purchase isn't a one-time bet. It's a signal that real value is returning to infrastructure, both in traditional markets and digital ones. The world is shifting back to fundamentals, and Buffett's positioning shows exactly where that shift is heading. As the noise fades, the investors who focused on systems, not speculation, will dominate. So while everyone debates whether Buffett is wrong about crypto, he's quietly doing what he's always done, winning by being early to the next certainty. And when that certainty becomes clear, everyone will say it was obvious, but only after the 10x has already happened. Because by then, the price will reflect what Buffett saw long before anyone else did. The same will be true for crypto. The people who understand the infrastructure now will look like visionaries later. Buffett's not chasing hype, he's positioning for history. And that's exactly what you should take from this moment. Every investor gets a choice. Follow noise or follow logic. Noise fades. Logic compounds. Buffett chose logic, and that's why his wealth keeps multiplying long after others burn out. If you apply that same mindset, whether in stocks, crypto, or any asset, you'll realize the goal isn't to predict the next hype cycle. It's to align with inevitability and wait. Because inevitability doesn't need hype to happen. It just needs time. This is Crypto Equation reminding you, patience isn't waiting, it's preparing. And the investors who prepare now will own the future. Everyone else is chasing later.